Hello and good morning. It is a nice day for starting new trading. We are one day before the FOMC news release that is happening tomorrow at 2 and 2:30 p.m. New York local time. We have the recording of today here, and I'm just looking at the market and the 15-minute chart. So from the 15-minute perspective time frame, we can see the market has traded into the sell side liquidity that we mentioned from Friday, and there is another sell side liquidity that is right above the consequent encouragement of daily CB happening, and we do have these relative equal lows over here. These relative equal lows created our sell side liquidity for beginning of this week. I'm sorry, beginning of Friday's trading, and you can see this big area over here is our daily CB that is formed. If I show you it on March 28th, the market has traded above the daily CB and came back to it. So right now I'm expecting to see a kind of resistance from the market, support from the market, and tries to send the price to this swing point over here, swing high from March 26th. I'm marking this point also as a buy side. On March 26th, dropping back to the 15-minute chart, you can see the levels are now shown on the chart over here. Okay, once we have these levels from the 15-minute chart, I would like to drop into 5-minute chart and highlight the important levels on this chart as well. Here, that is something that is attracting my eye is these relative equal highs over here for the intermediate bias. I'm highlighting this place as our buy side liquidity. This can be a very interesting point for the market to reach towards today, but we do have a inefficiency over here from today's London session, that is 15-minute CB, sell side imbalance, buy side inefficiency, and we can see the market has traded into it, respected it, and went lower once we overpassed it, and we came back down very sharply. We closed above the new day opening gap of the month, May 1st, and after that we get back to this small CB formed on the 5-minute chart, and this has sent the price to lower prices. You can see the reaction of the market to the consequent encouragement of this 5-minute fair value gap. Right now we are trading above the new day opening gap on last Friday. I apologize. All right, now I'm back again. We can see the market has traded into the new day opening gap from May 1st. Has a very nice reaction from this breaker block over here, high, low, higher, high, and this down close candle blocks over here. These three candles are considered as our breaker block. And once the market has traded into this area, had a very nice drop going lower to reach the high of the new day opening gap on Friday. I just wanted to highlight this breaker block that is very nice reaction for the market reaction. You can see the consequent encouragement is respected by the price. And yes, after this reaction, we are now trading right below the new day opening gap high on Friday 2nd. Not saying all of this, we are going to 1 minute chart, and we focus for most of the trade today on the 1 minute chart. We can see here we did have relative equal high lows that the market breached them, and after that immediately the market started going higher for reaching the buy side liquidity above this high and optimally above this relative equal highs over here. And the market, you can see, spent a little time, and after that traced back to go below the sell side liquidity below here, these relative equal lows, and finally we went below the breaker block over here. We traded into the breaker block and fell short, purged the sell side liquidity under this low, spend a little bit time over here, and I was expecting this to go higher and reach to this relative equal highs over here, but the market failed to do that and immediately started going lower. In this case, now we have to be patient for 4 more minutes in order to get the opening price of the New York session. That would be a discount opening because yesterday's settlement price is over here at sorry, 20,036 and 3/4. And we do have a kind of very big open range gap from price over here to, let's see, right now I'm waiting for the market to open, and we will have more insight for how the price is going to book today. Yesterday's PM session to me was a very nice session, and I really enjoyed taking a trade. I have uploaded the trade over here as a total soup trade. I was expecting these two candles over here become our order block as I highlighted here, and once we traded to the opening price of this white candle, we have a very nice sell-off over here, and I exited here, but the market had delivered lower to the first presented fair value gap in the PM session, as well as the relative equal lows over here. And yeah, this is for yesterday's trading. You can find the short on YouTube as I have uploaded. We have 1 minute to the opening bell, and this is our opening range gap. We have around 240 handles of opening range gap for today. Still 7 seconds. And let's see. This minor buy side liquidity over here is quite interesting. Okay, we get back to the chart over here as we have, and let's see. Okay, in the 15-minute chart we can see that we have this sell side liquidity of relative equal lows. Now the market has traded I apologize, apparently I had a problem in my connection, so now we are back again, and I hope you can hear me well without any problem. Okay, let's test a little bit. Alright, now you should hear me completely without any problem, and we have this run to the low of the new day opening gap on May 1st. Probably we have here over here our first presented fair value gap. That is from between this and this candle. We have 15 seconds left to see here, and just a measure. Yeah, we have around 40 handles on. Alright, now I put the trade for going higher above this buy side liquidity. I got failed over here, and I placed my stop loss at 400. Notice that we do have this breaker block in 5 minutes. That is a little too much right for my taste. And we have this new days opening gap over here, and the buy side liquidity that I aimed for is over here. Now I'm looking to the market reactions to this midpoint. So far we are trading below the new day opening gap of May 1st. Now the market is getting close to near the opening gaps high. We could not go above this swing high over here, these relative equal highs, and the market is a little indecisive at this moment. I would like to trail my stop loss below the low of this white candle over here in order to cover the costs, and the market is not showing us very good price run, so maybe we get stop out. In this case we saved a little bit money, so just waiting for the market to show us a little run. You can see the bodies of the candles are around the 50% of this week, and let's see. We have to consider that wicks and shadows are considered kind of gaps. We have to treat them as fair value gaps or new day opening gaps, and we measure the gaps, and the important levels are the quadrants as well as the consequent encroachment, that is the midpoint. So we know the candles are still respecting the midpoint of here after touching the high of the new day opening gap. Now we are trying to go above the midpoint of the breaker block. We tapped the OK. The first position of today's, we got filled in profit right above the buy side liquidity I mentioned. We got filled in our position within 1, 2, 3, 4, 5, and 6 minutes. The position worth was $815 per contract. I had one contract over here from the high of this first presented fair value gap, and we have traded all the way up to the level over here, top of the 5-minute breaker. 5-minute breaker is 19,857.3 quarter, and my position was 58 even. Notice that we traded into the 5-minute CB over here, and now we traded low into the midpoint of the new day opening gaps. We can also consider this over here as a breaker block. In the 5-minute chart, you can see it a little more clear. Low, high, lower low, and we broke above this swing. We traded above and came back to this white candle, the last up close candle over here. After that, the market has traded higher. Or in the 1-minute chart would be this candle over here at 8:56 a.m. and the market has a very nice reaction going higher. I would like to cancel this breaker in the 5-minute chart and just keep it simple over here. We are trading right below the sell side liquidity from Friday 5 o'clock. And just a little bit of notes over here. Okay, this is our buy side and sell side is right here, 58, and this is my exit point. Very nice and sweet. Now we are trading back to the new day opening gap, as you can see over here. Just one thing, because I want to show the executions are live. You can see the labels are getting on and off, and this is not a market replay. consider that in today we don't have any type of news, not a red or orange news happening today. So the market could be a little bit choppy. This is the day before FOMC, and I need to be content with what I got from the market at this time, at this point, because it delivered to the buy side liquidity that I was mentioning before the market, and I highlighted this point over here. The other side of the market, we do have a relative equal lows of Friday. This can be a little more interesting once the price is trading lower, and I'm expecting the price goes below the first presented fair value gap of today. After that has a little bit retracement to first presented fair value gap, and then starts its journey going lower. But we have to wait for that part, and remember the midpoint of the opening range gap is resting up over here at 19,916. So this was the whole idea for today's trading to me, but we can see and wait for the market to see if the sell side liquidity down over here is also being delivered or not. So far this 5-minute CB is acting quite nice and clean to the market. Now I'm watching to the week over here and measure this for watching, and you can see it appear to to the upper quadrant, and this candle has a very huge round lower to the first presented fair value gap. Let's see if the idea of trading below the first presented fair value gap and using it as an inversion is becoming valid over here. The fact that the price has spent a lot of time over here up and down with a lot of overlaps makes this kind of market a little bit high resistance and low probability for very easy setups to run, but it requires much higher experience spending on the market, and it's not very advisable to trade in this condition of the market. I'm just over here to have tape read and kind of look at the market, how it's behaving, if it's good or bad, whatever happens. I'm just saying my opinion about the market. This is not any type of advice for investment. We closed below the first presented fair value gap and traded to the midpoint of that. I'm expecting to use this first presented fair value gap as an inversion and then sending price lower. But right now I'm looking at the level of this week over here, how the market is booking. Now trading to the midpoint of it. Okay. Usually on the days before high impact news like CPI, PPI, FOMC, or NFP, we do have this type of candlesticks sitting a little bit out of the first presented fair value gap or our PD arrays, and the next candle or the second candle after that gets back to the range above or below. In these conditions, this is sign of high resistance for price delivery. So we have to be patient and not rushing into any kind of positioning. This is a very good run closing below the first presented fair value gap, and if it happens coming back to this level over here, I'm interested to get into a position for going short. Otherwise, you can utilize this midpoint of the week over here for entry to a short position. Trading to the low of the opening range gap. Now we are getting very close to the sell side liquidity that I mentioned. They shouldn't send price higher at this point. I'm just expecting the price keeps going lower and lower in order to not allowing them to remove their stop losses from this position over here. Consider that now we are in the macro time between 9:50 and 10:10. The sell side liquidity is resting at 19,749.5 or 750. Around 10 handles to the sell side liquidity that I highlighted on the chart. and there you go. We hit the sell side liquidity as exactly I was expected. After purging the buy side liquidity over here, having a little spending time up over here, and then immediately sell off to the sell side liquidity from relative equal lows on Friday, opening of the Friday trading. Okay, right now we have delivered both sell side and buy side liquidity. I'm interested to see if the market is available and has the power to keep dipping lower to reach the consequent encouragement on the daily CB over here, or no, that is around 19,712, 14, something like that. So we do have a very nice delivery from the 5-minute CB that I highlighted before the market. Over here, we delivered from the first presented fair value gap in a quiet high resistance liquidity run higher to the low of this fair value gap. After spending some time and collecting the orders over here, we started selling off and going towards the sell side liquidity over here. Notice that after these two candles touching this sell side liquidity, we turned back to the near the opening gap of Friday. And in my opinion, this is not an invitation to send price higher, because we do have a little more inefficiencies over here, and this has to be delivered. At this moment, I'm just not interested to go for short position, because now we are in a very discounted area, and that's it. We have traded very low, around 240 handles, and we initially delivered to the buy side liquidity. After that, market turned into delivering sell side liquidity. Now still we are trading in this CB formed over here, and these candles close to this candle's high. We have a 1-minute fair value gap over here. This has happened on this breaker block over here, high, low, and higher high. The market is trying to reach to these red candles, these 4 red candles over here, as these are creating our breaker block, and after that discovering lower prices, in my opinion, but we have to wait. Okay, after the reaction from this fair value gap over here, now we are discovering a little lower prices. Notice the midpoint of this fair value gap over here. I apologize. My throat is a little bit dry, and I think this is happening for the fact that I'm talking a little bit these days too much. I wanted to say that maybe for tomorrow or today's PM session, I plan to have a live stream and come back to the market for a review in the PM session. Now I'm watching the market repricing to this fair value gap CB over here, as this area over here is a balanced price range. In my opinion, they shouldn't send price easily very hard. Getting back to the fair value gap in a 1 minute chart, tap to the low of new day opening gap, and let's see if this candle is closing below the consequent encouragement of 1 minute fair value gap or not. A little bit above that, but still at the low of the new day opening gap. And we tap into this breaker block over here that is confluenced with this CB and touch the low of the opening range gap over here. If we can close above this fair value gap over here and come back to this fair value gap, I'm expecting this to act as an inversion fair value gap. But so far, we couldn't validate this as an inversion fair value gap. Still, the market is respecting the low of the new day opening gap from last Friday. Well, let's look at the chart over here. Yeah, we do have a related equal highs over here in the 5-minute chart that in my opinion they will utilize this in another time, probably in the evening time, in the afternoon time, to send price higher over here. But since the open range gap for today is quite a large range, it is a little out of reach for sending the price up over here. Oops. For this buy side liquidity. But let's see. Nothing in this market is impossible. Now we closed above this fair value gap over here, and as I said, I'm expecting to see a run over here to this fair value gap and use this as an inversion. So far we traded into the consequent encouragement of this week at 9:30. I'm expecting to see this fair value gap is acting as an inversion and sends price higher. So let's see, probably from high of the inversion fair value gap to this point over here, or the first presented fair value gap, the draw could be. Touching the high of the inversion fair value gap at this point. I don't think if we put an order over there, we could get filled. I need a little run lower. Okay, now we stunk into this place, and I'm expecting a run to the first presented fair value gap minimum. And we hit the first presented fair value gap over here. You can see within less than 1 minute, 225 handles delivered. And even it went above the first presented fair value gap. If we can close above this, I'm expecting to use the fair value gap as a reclaimed one and use it to deliver higher prices over here. Okay, now we can use the first presented as a reclaimed one and send the price higher. The first target after touching the fair value gap could be the low of the new day opening gap from last Thursday. Now visiting the price levels over here, failing to reach the consequent encouragement of this week. We reached the midpoint of new day opening gaps and now marching towards the high of that. Note that we closed this inefficiency over here by delivering this run over here with this candle. I'm measuring this week over here and watching the midpoint. Tapping into the midpoint of the week. Once again, touch the first presented fair value gap. note the reaction of the market after each time touching the first present fair value gap. And now this time we are going higher, reaching to the midpoint of new day opening gap. Trading above the new opening up and touching once again the sales of liquidity from Friday. That is also the midpoint of the 5-minute fair value gap. Yeah, now I'm expecting a little run lower to reach to this easy from over here, and from here sending the price to the midpoint of the open range gap. Now we are trading in the midpoint of the 5-minute fair value gap, as you can see. We reach to the 15-minute sell side imbalance, buy side inefficiency, and getting closer to the midpoint of the open range gap. you just need to select one of these entries that are highlighted over here from this conversion fair value gap that is happened over here with this red candle stung it, and after that run higher, or the first presented fair value gap that is happening with this candle touching the high of it and immediately rejecting to go higher to the midpoint of the 15-minute CB and preferably to the midpoint of the opening range gap. This is my terminus, the midpoint of the opening range gap for today's morning session. Notice that we delivered the buy side liquidity over here in the 5-minute chart and 15-minute chart, as you can see. And right above that, we do have a midpoint for opening range gap. Once again tapped into the 15-minute fair value gap. You can utilize this 15-minute as an inversion also for entering to reach today's midpoint of the opening range gap. Now look at the midpoint of this week at 10:25. waiting in the upper portion of the 15-minute fair value gap. In my opinion, now they are accumulating for position to send the price higher to reach this midpoint over here. It is very suspicious to send the price very close to the midpoint and not deliver that midpoint. But this candlestick has a little intention and power to reach to that point. Let's see. Well, still we are trading in our proportion of that 15-minute inefficiency. Once again, we are trying to reach to that midpoint. once we deliver to this, if it's between now and 10:45, I will stop the live stream. Otherwise, at 10:45, I have to go, and I'll let you study for later time. Two handles more, and there we go. The midpoint of the opening range gap has been delivered, and this concludes the morning session to me, as I was expecting. And I was calling the market first, reaching to this price of liquidity over here. After that, I'm spending some time in the first fair value gap in 5 minutes. The market turned and delivered to the sell side liquidity of Friday that had a relative equal lows, and after that we have very nice retracement from this level. Look at the bodies, how they're respecting the line for sell side liquidity. And I was saying at the time, once we trade above this inefficiency CB, I'm expecting to act as an inversion fair value gap, and you can see the market traded once into this inefficiency over here and started its rally higher to reach to this midpoint of the opening range gap. And we had another opportunity for the entry going long at the first presented fair value gap over here, and after that the market just keep going higher and higher. And I think that's it for today. It was a very clean and easy market for today, except the first some minutes that showed a little high resistance. After that the market was very liquid and soft and smooth. So till talk to you another time, be safe and goodbye.